investment decisions, Phil Grande has some sound reasons you should join Phil's gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com.
Your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. Good afternoon and welcome to Chart Podcast. Randy. All right. So let's go back to what happened in Monday. And remember, the FOMOs came in and started to buy all the AI stocks. They thought, well, I'm going to buy on the dip. Now, remember why these AI stocks are down. One of the reasons is they've been lying to us. I pointed this out yesterday. They've been lying to us about tariffs. They've been telling us tariffs do not hurt people. The tariffs between 8 and 10%, or 10 and 18% are fine. People aren't feeling it. In fact, I think I have racked that up, if you can play that one for me. Okay, let's see if I can find it. Yeah, I think it's, let me see it. Hold on. I thought I racked it up here, and I did. Okay, we'll find that. Okay, we'll find that later. I don't know where that went. We racked it up, but I'll find it for you. So anyways, let's get back to where we are. So again, we had the FOMOs buying all of the AI stocks on the dip. Now you got to remember, how did AI stocks get there on the dip? Because the smart money, the institutional money, because of the tariffs between 10 and 18%, destroyed a lot of the stock value of those companies. Hedge funds, big institutions, all own those stocks. And what happened is the prices started to drop. And the hedge funds got hit with a big margin debt. Now, what did they do? Well, they were already dumping the AI tech stocks because the valuations are stretched. Stock prices are higher, much higher, than the earnings. So there was bad news with these stocks. There wasn't a lot of confidence. And so they started to dump those stocks too. So between dumping the AI stocks to cover their margin calls, that took it down. And so again, the traders, they still don't believe that these tariffs have an effect on the market. Matter of fact, I had a cut yesterday where the president was saying that the tariffs didn't have an effect on the market, didn't have an effect on the people. Go ahead.
How do you make sure that these CEOs, that these companies don't, in fact, pass on the cost of tariffs to their consumers?
They cost Americans nothing.
But it did. Between April and October, $115 billion. And that's a tax. So it did cost. It's not true. So again, these tariffs are a real problem. And if it wasn't a problem, as I said yesterday, why would the president come out with the idea last week? I think I'm going to send a check, $2,000 to every household to make up for the beating they took on the tariffs. So one minute he says the tariffs don't affect the economy, do not affect the consumer. The next minute he's saying he's going to go ahead and he's going to bring up to Congress, let's get this thing passed. We will send them $2,000 every family, just like we did with COVID. It will stimulate the economy. So that's what. So the truth is the tariffs are a big problem. So this all hit the big hedge funds and the big wealth funds. So things weren't doing well. Now, what was interesting that happened is another piece of news came out and about the AI companies are not reporting the correct earnings. What they're doing is they're lying about depreciation. So if you own a business, you know that you have equipment, everything depreciates, and you're allowed to take that depreciation. Now, when you go to sell your business, let's say it says, I made $500,000 a year, but then you always point out, yeah, but look at the depreciation over here, okay? I had $100,000 in depreciation, so add that back and you got $600,000. Well, they're saying there's no depreciation. Can you imagine? They're talking Oracle. They're talking Oracle alone. If they did the accounting method they're supposed to use and identified the depreciation, their earnings are 26% too high. And same thing with all these other AI stocks. These companies, their earnings are way too high because they're saying we don't have depreciation, which is not true. So that's more problems with your AI stocks, why you're seeing them go down. Now, normally we see the FOMOs go in and buy them, they come right back up, but that hasn't been happening. We're going to go over some of these stocks. But think about what they're doing. They're manipulating. In fact, some cuts we had, see if you rack those cuts up for me today, the ones that they're contradicting themselves. Good. Listen to this. Take Oracle. Oracle now, oh, and by the way, I want to clarify something. This has just started this year because of all the AI. They're talking by the time we get into 2026, 2020, it's going to be a huge problem, a big lie. And earnings are going to look much better than they are. And they're going to be fake earnings. Now, listen to this.
The S&P 500 index fell 0.4% on Tuesday. Shares of Oracle shed more than 2% on a report by trade publication The Information that its AI data center hosting business has so far shown thin profit margins.
That's the problem with all this AI. They're not following these they're not getting the returns. The profit margins aren't there. So that's why they decided to go against the accounting rules. I don't know how they can go against the accounting rules that are set in this country, but they do. What a terrible thing. So, and then listen to this.
The S&P 500 fell 0.5% on Tuesday, dragged down by 3% or somewhat greater declines in the shares of Nvidia.
Okay. All right. So, sorry about that. So my point is, all these AI tech stocks that all the FOMOs are buying, fear of missing out, they're buying a mess. So that's why you're not seeing, when you go and take a look at your stocks, let me just point out to you what's going on here. This is crazy. We're seeing a shift now out of tech to value. So we're seeing a shift out of growth. So let's take NVIDIA for a moment. You put up on a chart. Do you have that rack back up? Okay. NVIDIA. Look how NVIDIA has collapsed. Now go take a look. Let's go to a value stock. Amgen. Look how Amgen's going up. Look how Meta, a growth stock, is, look at it, getting hit hard. Before, these would go right back up because the FOMOs would be in there buying right on the dip. So look at Meta. But now what they're doing is they're taking their money, the big players, and they're putting it into Amgen. See how Amgen's going up? So you got NVIDIA going down. You got XLV, okay, healthcare stocks going up. You got Meta collapsing. But you have Amgen going up. You have AMD. It's just struggling. It's got a beautiful pattern. This is called the flag pattern. And it's struggling to get up there, okay? But the problem is you can see with your stochastic, there's a rollover, and that's hard for the stock, AMD, to move higher. But AMD is one of the few stocks, tech stocks, that are going up. One of the best ones that are still going up is the one we own, Micron Technology. Now, MU has been really fantastic. MU's been doing well, very strong, okay? And take a look at MU. But those are the exceptions. So when you go right down and you compare the AI stocks, the growth stocks, you can see the money shifting out and going to Amgen, going to Lilly, going to oil, BKR, going to Schlumberger, going to GE. These are all value stocks. Look at Caterpillar. But they're trying to lie to us, and they're trying to say, oh, no, there's nothing here to see. Everything's just fine. Now, they're trying to rotate. And I told my members this. I said, we'll start buying slowly some bank stocks because they're going to rotate out of growth tech. And they're going to rotate into value. And what's better than in value stocks? The banks. And you can see, look what's going on. JP Morgan's is going up, right? But Microsoft is going down. Look at our Citigroup trying to break out, going up. Goldman Sachs, break it out. Morgan Stanley, break it out. But when you look at stocks like Meta, and you look at stocks like NVIDIA, and you look at stocks again like Qualcomm, they're collapsing. So is that the end of the AI, the big tech era? Is this the end of it? I don't think so, because they're always going to find a way, like they are doing, manipulating as much as they can the depreciation, which is insane. How can they not have depreciation? But they're finding a way to do it. Now, everybody asks, when will the market crash? Well, I've told you, there's never, the only people that ask that question, when do you think the market's going to crash, are people who are not professionals in this business. Because a professional who's been in this business sees, identifies those specific things that tell you the market's going to crash. Specifically, the bond market. The bond market tells you if the market's going to crash. The bond markets tell you if the market's going to rally, if it's going to be positive or it's going to be negative. So, when you look at, for example, the bond market, and my point is, a professional always knows when the market's going to crash. He's never shocked. Oh my God, did you see that? The market crashed. Oh, did you see that? Look at the correction. Because the market's forward looking, the bond market gives us signals that are forward looking. Let me give you an example. The bond market. So, inverted yield curve, the bond market. That's a great indicator. So you should be following your 2-year treasury and your 10-year treasury. Then you'll know when the market's going to give out. Now, you're not going to know it's 4 o'clock on Thursday, but you know things are getting worse. That's my point. You'll feel it, you'll see it, because you'll see that there's more demand for the 2-year than the 10-year. Also, you also identify, okay, that if you follow the tight connection between interest rates and stocks, which there is, you follow that, you're going to know, because that connection between interest rates and stocks, that's connected. Now, first of all, if you're in the bond market, to understand the bond market, try to find the volatility, you look at the MOVE index, M-O-V-E. And then you connect the MOVE index with the VIX. And when you connect those, it will tell you. You'll see for sure what the market's going. Is it going to go up or is it going to go down? Because you got to connect those two. So if you look at the 10-year, the 2-year, if the 2 years overtaking the 10-year, you look at the volatility in the bond market through MOVE, you look at the VIX index. Now, there's one more thing to look at that always tells you the problem's coming. Now, remember, you're looking forward. You can see these things happening, but it doesn't mean, again, Friday at 1:15, the market's going to crash. You don't know how long, but you do know it's in that mode. All you want to know when you're a trader, because the market looks forward, you just want to know what the hell's going on. What's the real sentiment? If you listen to these guys on CNBC, these jibber jabbers, these suits, these dopes, everything's always wonderful. Everything's always wonderful.
30 seconds.
Gold. Gold. That's another big indicator. When you see gold rallying like it's been rallying, and right now the only reason why you're seeing gold pull back a lot is because not a lot. Okay, it's pulling back very little compared to where we are. But when you see, that's a lot of that is profit taking, and a lot of that is you're seeing Nvidia and all these stocks coming down. They're starting to dump gold because it's a safe haven to raise money for their margin debt.
8, 7, 6.
So those three things will tell you. You just got to know how to look at it, and we'll help you with that. We'll show you how to look at it and interpret it. But
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
The S&P 500 gained 0.6% on Wednesday, led higher by the bellwethers of the AI build-out. That would be NVIDIA, Broadcom, and AMD. A near-daily rush of huge new capital commitments and major chip orders have kept this theme in the lead.
Oh, really? I don't think so. Let's take a look at them. NVIDIA, look at that. Came right off its highs, gave it back. Look at AVGO. Look at AMD. Look at that. Okay, these guys are, AVGO and AMD are much stronger than NVIDIA. But again, we're used to seeing every day making new highs, making new highs, making new highs, but it's not happening. So, because there's a lot of problem with these AI stocks, and they're masking the problems. They're masking the problems. Just like, I can't remember the name of the company. Remember the solar company that Obama put billions and billions of dollars in it trying to mask it, the problems? Then finally it went bankrupt. They believe if they keep, the AI companies keep falsifying the depreciation and continue down the road that they say, oh, we have no depreciation, that's giving you earnings you're not supposed to have. I mean, that goes against every accounting standard in America. But they're doing it. They're getting away with it. And people are accepting. And the FOMOs will still go out and buy the stock. Because the FOMOs, if you don't know what a FOMO is a tourist. He doesn't know what he's doing. He's a gambler by instinct. He doesn't want to learn anything. He's just a gambler. And he's always buying stocks at the very top, at the peak, instead of buying them in the sweet spots at the bottom. So as long as and I told you this before, when they stop with this in December, okay, the QT tightening. When they stop that QT in December, that's going to be really bad. They shouldn't be doing that. We haven't got enough liquidity out of this. Remember, you got to keep your inflation number below 4%. You've got to be around 3.5%, your inflation. Now, the real inflation's about 7%, but they're not going to tell you that. They're not going to admit to that, okay? So let's use the false inflation right now. I think inflation, well, they use it for a number now, Willie, for inflation. What's today for the inflation number? Is it, check it out for me. I'll get it from Willie here. He'll check out what the inflation rate is today. But they're messing with the inflation rate. So again, 3%, thank you, 3%. The target's 2%. Now they believe they can get it back to, they think they can get not only that back, but they also think they can get the 10-year Treasury yield back to 2.1, 2.2, under 3%. That's their goal. They think they can do that. It's over 4%. It's not going to happen. And I told you this before. They think they're just going to go ahead and keep doing what they've been doing, and that they'll just this interest rate that we have now, okay, is just going to fall when they decide to, okay, let's cut the Fed rate. And we cut the Fed short-term rate, which they control, then they think, then what's going to happen is the long-term rate will come down, because when we go, they don't control that. When they go to auction, we're going to have our three biggest banks come back. We're going to have China, Japan, and UK all coming back and taking the cash from all the stuff they sold to Walmart and Home Depot and Lowe's and Cost. They're going to take that cash and they're going to start buying bonds again. No, they're not. They're going to continue to buy gold. Gold is not over with. This rally is not over with. Because all of these big institutions, all of the banks, central banks around the world, they're still buying gold. They're not going to they're not going to help us out and come in and say, okay, we'll buy your treasuries to help you. They're not going to do that. That's insane to think that. But Powell thinks that as long as he controls the Fed, he can get that Fed rate down, okay, as close to zero as he can, then the 10-year Treasury will drop down to about 2.1%. He could bring it all the way back down, and here's what he's going to do. I said this before, and remember this, when this happens, he's going to bring that Fed rate down. And then he's going to look and say, my 10-year Treasury yield's not working. It's not coming down. Well, why would it come down? Just because you hope that China and Japan and the UK are going to go to the bond market, Treasury, the auction. They're going to start buying Treasuries with their dollars, with the stuff they sold to us. Are you insane? That's not going to happen. And then the final panic's going to come, and you say, I'll bring it right back to zero. I'll show you. I'm going to bring the Fed rate back to zero. We'll do QE again. Of course, they're not going to call it QE. Just like, remember, they called the other QEs, QE1, QE2, and the QE3 was, what did they call it, QE3? What was it?
The twist.
The twist. So they'll come up with some names to try to fake us out. All right. So again, going back to identifying when the stock market is going to have a move and correct and crash, you got to watch the bond market. And the bond market's not going to tell you, like I said, 215 next Thursday. But it's going to warn you, if you read it right, things aren't good. Things are not good. And you're going to see that when the inverted yield curve starts. Everybody's buying the 2 instead of the 10. You're going to see gold continue to go up. That's telling you it's going to be a crash. If you follow the tight connection between rates and stocks by following the MOVE index and follow the VIX, it's going to show, we're in trouble here. The VIX keeps going high. Remember, when the VIX is low, you go. When the VIX is high, you buy. And when the VIX is high, that means the stock market's low. Take a look at it today. This is ridiculous. Right here, look at the VIX. When the VIX is high, you buy. Why? Because the stock market's low. Let me show you what I mean. So the stock market, okay, when the stock market, okay, is down here, right here on the bottom, right here, there's the market, and the VIX is high. So if it's on the bottom, when the VIX is high, it says to buy. But when it's on the low, it's telling you to go because the stock market's all the way up here. It's in the wrong direction. It's up here. So what's happening is showing us right now what is going on. That VIX, remember that VIX and MOVE, that index, if you watch them, remember they correlate together and they with the VIX, and you're going to know exactly what's going on. And here's the thing. When you go and take a look at your inverted yield curve, it's going to show up. That's bad news. It's going to show up in your VIX because the VIX is going to be low. That's bad. VIX is low. Nobody buys stocks. And then when you go look at your, that's the invert. Then the second thing you got to look at is gold. When gold keeps going up, go check VIX. It's going to look like it is today. The VIX is low. Look at where our gold is today, even with the little correction we had. Look where the VIX is. Look where the VIX is. Look at gold, look where the VIX is. And even now, the inverted yield curve is not moving that much, but the little's been moving. We're seeing, again, the 2-year being more popular than the 10-year. Now, it's not exploding. It's nothing to worry about right now, but you can see it. So between the yield curve and the gold, and then you see, you tie that all together with the VIX and the MOVE index, you know something's wrong. Trust that VIX. It will never, and trust your bond market. The bond market is such a great thing, okay, because, again, higher rates, higher yields, okay, people do not want, okay? Stocks move lower, all right? Stocks move lower. And as I said, lower bond yields always lead to high stock prices. Always does. Higher bond yields leads to, again, leads to lower stock prices. So again, so again, and now remember too, 90% of the retail trader, again, they don't have any idea what they're doing, and that doesn't help because every time the market starts correcting, they jump in, and they've been doing that, but now it's going to stop. It's going to stop, okay? So, because the big CEOs of these big tech companies doing all the stock buybacks, they're cutting back. That means it's one reason why you're seeing the prices going down of AI stocks. The other, you're seeing hedge funds are dumping them to pay for their margin calls, okay? And again, when you have these low bond yields, that's going to lead our stocks up, right? Low bond yields. But look at our bond yields. Look at the 10-year Treasury. Look how it's been up that 4% area. So if you could bring those back down to about 2%, right? If you get that yield down to about 2%, then you're going to have good stock prices. But when you have these yields of 4%, now remember, they always try to get inflation below 4%. That's another thing. They try to get inflation below 4%. And again, once you get, you really need to have it drop below 3%. 4% doesn't do it. When you're at 4 to 5%, that area, you're screwed. Your market's going to correct or crash. You get down to 3%, it feels better, but you haven't finished the mission. You've got to get it underneath that 3%. So, and always remember again that when you just, the simplest thing about the bond market are the yields. So simple. When you see that, here, when you see the bond market doing this, I mean, it's so easy to identify what's going on with it right here. Okay, let me put it up here. Okay, there's the 10-year Treasury. See how it's going up? Yields are going up. Now, when yields are going up, that 10-year Treasury yield is going up. That's not good. That's not good. And so it's sending us a message right now. We got higher bond yields leading to lower stock prices. Look at AI. They're starting to collapse. You got investors moving out of growth. They're moving back into value, like the banks and other stocks, because the bond market is sending us a message. The market's in trouble. The economy's in trouble. Gold is sending the message. The market's in trouble. The inverted yield curve. Not much of a move yet, but it's moving in the wrong direction. Another danger, red flag. So that, and again, you go back to the consumer. They keep telling us how this consumer is getting stronger. How can that be? Savings are the lowest at 2.3%. We've never seen that in 30 years. Home mortgages, car payments, credit cards, the worst ever. Delinquencies. We've never seen delinquencies this high. The other thing, we've never seen minimum card payments like this. They're historic. We've never seen minimum card payments like this. Student loan. Want to hear some good news, bad news? The good news and the bad news. While there's no taxes on tips, which is a wonderful thing, that's going to give consumers $2.5 billion to put into the economy. But the student loans, no more. They're going to get away with what Biden was doing. $50 billion is coming out of the economy. Mortgage rates have doubled since 2022. I just mentioned credit card payments, minimum payments, historic. Auto, trucks, delinquencies, the repossessions, never seen this high. Matter of fact, Jamie Dimon came out today, was talking about how concerned he is about it. How concerned he is. Mortgage delinquencies are now going back up. Unbelievable. Repossessions, 10.5 million. That's the run rate right now. They're at 7.2 million, I think, but the run rate is 10.5 million. But they're telling us how great the economy is. Let's see. Let's see what, but I'll tell you who's going to settle everything.
The reality is real wages are an all-time record high. Consumption per household is an all-time record high.
Wages at an all-time record high. Really?
5, 4.
But look at the layoffs.
2.
Doesn't work. Join my gang. Learn how to protect yourself by selling short. Free for 10 days.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.